Friends, now we can see the amendments in relation to buyback of shares. Point number 1. Buyback of shares means purchase by a company of its own shares as for any provisions of any law, that is known as buyback of shares. See the word buyback means purchase by a company of its own shares in accordance with any law for the time being in force relating to companies, that is called as buyback of shares. Okay. In case of buyback of shares, we need to check whether it is a domestic company or other than domestic company. For example, if it is a domestic company, then answer would have been different with other than domestic company. So as far as Finance Act 2019 is concerned, there are many changes in this topic. Very important topic. We can expect one question in the forthcoming examinations. So first I would like to cover the topic called as domestic company, shares of domestic company. Suppose Reliance Industry wanted to buy back its shares, that is known as domestic company. So with effect from 5th July 2019, the amendment came into force. So please follow this amendment. This is applicable for either listed company or unlisted company. I repeat, so once upon a time it is only restricted to one category companies. Nowadays not like that. I don't want to confuse you. Domestic company or not, you have to check. That's it. Whether listed or unlisted, both the things are not relevant. Even though listed, even though unlisted, answer would have been same. Okay, chalo. First one, shares of domestic company, whether listed or unlisted, section number 115 QA, section 115 QA provisions are applicable. Okay, chalo. What is that? First one, in the hands of company, domestic company is liable to pay the tax at the rate of, that is 23.296%. I repeat, 23.296% on the distributed income. So in case of buyback of shares by domestic company, whether listed company or unlisted company, the company is liable to pay the tax at the rate of 23.296% on distributed income. What is the meaning of distributed income? Distributed income means no buyback price minus issue price including free premium if any. Okay, so simply distributed income means buyback price minus issue price including premium. Okay, chalo. But what about shareholders? So in case of shareholders of domestic company, no, that is fully exempted under section 10 subsection 34a. I repeat, section 10 subsection 34a, it is fully exempted. No tax treatment in the hands of shareholders. So section 10 subsection 34a has been amended. What is the amendment? Once upon a time it is exemption only for certain category shareholders. Nowadays not like that. Even though they are the shareholders of listed company, even though they are the shareholders of unlisted company, both the answers are same. So once a domestic company shareholders receive any consideration from the domestic company for the purpose of buyback of its shares, then that amount is exempted in the hands of shareholders as for the section number 10 subsection 34a. Okay, chalo. I would like to take one simple illustration. Reliance Industries, yes, this is a listed company, that too domestic company. I will take another example, L&T Infocity Limited. So friends, actually this is not a listed company. I do agree this is a public company but unlisted company, not Larsen & Toubro. Larsen & Toubro Infocity Private Limited. Anyhow, for example, you can take the illustration. So they wanted to buy back the shares of, suppose Mr. X, Mr. Y, Mr. Z are the shareholders. So these companies wanted to buy back their shares. Okay, chalo. For that purpose, they have to pay the consideration. So how much they have paid? 1000 rupees they have paid, for example. But they only, that is the 1000 price is nothing but buyback price. I repeat, buyback price. But here the persons Mr. X and Mr. Y and Mr. Z, they only purchase the shares once upon a time, that is issue price in those days, let us say 200 rupees, and 50 rupees premium in those days, that is 250 rupees. So ultimately Mr. X, Mr. Y, Mr. Z received 1000, but they got the shares at the rate of 220 or 250 in those days. So 1000 minus 250. So this is the differential amount. This is called as distributed income. Correct na? How it is distributed income? Once upon a time, Reliance Industries or L&T Infocity Limited, they have taken 250 rupees from these people. but today they paid back, that is 1000 rupees. The difference is 750 rupees. On 750 rupees, these companies are liable to pay the tax as per the provisions of section 115 QA at the rate of 23.296 percentage. They have to pay the tax. Once they paid the tax as per this following rate 23.296 percentage, automatically in the hands of shareholders of this XYZ, that income 750 whatever they have received, that is outright exempted under section 10 subsection 34A. Okay, chalo, this is the amendment. This amendment came into force with effect from 5th July 2019. Okay, chalo. But other than domestic company, answer would have been different. Suppose foreign company. In the company, if they wanted to go for buyback of shares, in the company, no tax treatment. I repeat, that foreign company, no tax treatment. Exactly reverse answer here. But in the hands of shareholders of that other than domestic company, no, capital gain is applicable as far as section number 46A. Friends, you know, section number 45 to section number 55A, this deals about capital gain topics, right? So out of that, section number 46A is applicable for the shareholders of other than domestic company. Okay, chalo, what is the answer? So here, computation of capital gain in the hands of shareholders. First one, full value of the consideration of the shares we need to take minus same cost of acquisition or indexed cost of acquisition. If it is long term, ICOA. If it is short term, COA, we can check. Then they may get short term or they may get long term capital gain. Yes, this is the computation. This is the computation in relation to capital gains in the hands of shareholders as for section number 46A. Okay, so friends, in case of buyback topic, the first most important thing we need to check is whether it is a domestic company or other than domestic company. We need to check. Fine, follow. Next one. Now here the amendment, listed company or unlisted company, both are come under same category provisions. Okay, see, another more elaboration purpose. If listed company on a recognized stock exchange buy back its listed shares from its shareholders, then the public announcement is made. So that announcement is made up to 4th July 2019. This is the old provision. Okay, in this case, in the hands of listed company, they are not liable to pay the tax. Don't confuse, I'm telling old provision. So once upon a time, before 4th July 2019, the company, listed company, is not required to pay. But in the hands of shareholders, 46A provisions are applicable. I'm talking about domestic company only, old provision I'm telling you. Don't confuse. Up to 4th July 2019, this would be the answer. So 115 QA and section 1034 not applicable in case of listed company up to 4th July 2019. Okay, so this is the major amendment. Once the public announcement regarding buyback of shares by the listed company is made on or after 5th July 2019, on or after 5th July 2019, in that case, in the hands of company, the company is liable to pay the tax as per section 115 QA at the rate of 23.296 percentage, but in the hands of shareholders, that is outright exempted under section 10 subsection 34A. Okay, chalo. So section 115 QA and section 1034A are applicable. So section 46A provisions are not applicable in case of listed company who wanted to do buyback of its own share after 5th July 2019. Okay friends, so this is the amendment. So please carefully follow this amendment as for the Finance Act 2019. So this amendment is much important for the November 2020 examinations. Okay, thank you very much. All the best.